So, who's Greg Foss? I grew up in Montreal. I went to McGill University as an engineer. I actually went to McGill to play sports, but I was good in math, and you'll see that math recurs in my talk. Mathematics is the base layer of language, okay? What I mean by that is it doesn't matter what your mother tongue is, Spanish or French, Chinese. Your base layer of language is mathematics. Everybody understands mathematics. Mathematics, in my opinion, makes the world work. We discovered math. We didn't invent math, okay? There's so many examples in the universe of things like, the perfect equation, the Fibonacci sequence, all of the stuff. Don't want to bore you, but Bitcoin, very simply, is mathematics and code. And it's a technology for transferring value at the speed of light with no intermediary. And what I mean by that, it doesn't have to go through the SWIFT banking system. It doesn't have to go through a credit card. It's peer-to-peer, settles instantly on the Lightning Network, or if you do it on-chain in 10 minutes with no financial intermediary. And this is so important because all the problems that exist today are due to centralized control. So Royal Bank of Canada, Canada's largest bank, I was working on a special projects group for the CFO. And here I am, 20-something years old, think I know everything. And in fact, no disrespect to the university system anywhere in the world, there's an expression, you know shit about fuck, okay, when you come out of school. And it's the truth. You gotta understand that a lot of the most brilliant people in the world never gone to university. They've learned it through different paths. So my CFO started as a teller in the bank. And after 40 odd years, he worked himself right up to the CFO level. His name, Emile Boulduc, French-Canadian guy. Our project group, run by a Harvard MBA, gave me a project, evaluate the Royal Bank's exposure to Latin American debt. This was in 1988. And the situation was, petrodollars were being recycled and lent into South American countries in US dollar denominations. And much like today, a strengthening US dollar caused financial distress in all these emerging market economies, and the US-based loans, the interest expense on the US-based loans became overwhelming, and countries defaulted. Okay? So LDC actually stands for lesser developed country debt. The biggest borrowers were Brazil, Mexico, Argentina, but there were actually 42 countries that were grouped together, and it included Philippines, Vietnam. It's incredible how history repeats, because these same countries, like Sri Lanka today, is bankrupt. X number of years later, from the same reason, the US dollar wrecking ball. So these countries were bankrupt, and Treasury Secretary Nicholas Brady had a solution to solve the defaulted debt, and it was called the Brady Plan. This was back in 1988. You guys can look this up. But the Brady Plan applied to global banks because the Royal Bank of Canada had its exposure, and Treasury Secretary Nicholas Brady, good guy, but didn't really care about Canada all that much. He wasn't designing the Brady Plan for the Royal Bank of Canada. He was designing for JP Morgan, Chase Manhattan, at the time Manufacturers Hanover. Incidentally, JP Morgan took over Chase Manhattan and took over Manufacturers Hanover. Okay, so that's a consolidation in the banking system. But here I am, young kid, and I'm like, okay, well, before I look at Mexico, let's look at the whole book. And now these numbers sound so piddly small in the context of today's $1 trillion numbers that are thrown around at lib, but Royal Bank of Canada had $4 billion of exposure to Latin American debt, of which $1 billion was to Mexico. And the Mexican Brady Plan was my project. Well, I said, no, just look at Mexico, let's look at the whole thing. The average trading price of the debt was 25 cents on the dollar, which means the $4 billion of loans that the Royal Bank had outstanding to lesser developed countries needed to take a haircut of $3 billion, right? You got $4 billion of loans at 100 cents on the dollar, they're trading at 25 cents. The difference comes out of your shareholders' equity. That in a bank is what is your risk-absorbing capital, okay? And I did a quick, okay, we got to write down $3 billion, go to the book value of equity of the Royal Bank of Canada. Holy smokes, it's less than $3 billion. All right, Royal Bank of Canada was insolvent. And I go to Emil, and I go, Emil, we have a problem. And he says, looks me right in the eyes, I know, don't tell anybody. Okay? This is the largest financial institution in Canada, and JP Morgan and all the money center banks in the US are in exactly the same situation. And so are all the European large banks, okay? That's why Treasury Secretary Nicholas Brady had to design a solution. Now, I'll tell you a little bit about the solution. It was actually financial gimmickry. It was accounting gimmickry to be exact, but it was brilliant. What they did is they took the loans, you had to restructure them into a 30-year instrument. So a 5-year loan turned into a 30-year instrument, and it was backed by US Treasury zero coupon bonds. So of the 25 cents, about 17 cents of it was backed by the US Treasury bonds. Brilliant solution, because over time, the $17 of a zero coupon bond accretes to $100. Now, I go to Emil and I'm like, dang, I love these bonds. Like, these are solid. Let's buy more. Okay, what do you think of Teller with 50 years experience in banking looks at a 25-year-old kid like, no man, we blew our brains out at 100 cents on the dollar. Why would I ever buy more at 25 cents on the dollar, right? So he did. Those bonds actually at one point traded as high as 130 cents on the dollar because of the value of US Treasury bonds, oil prices in Mexico, etc., combined in a package, made the price go from 25 cents on the dollar up to 130 cents on the dollar and matured at 100 cents on the dollar. Wow, exciting. But the thing I need you guys to think about is the global banking system was actually insolvent. And it happens regularly. I have been, in my career, through 4 financial crises, and they are all driven by the same thing, excess leverage in the system. So, Latin American debt, my introduction. I left the Royal Bank of Canada and I became a junk bond trader. And I experienced, when I'm sitting in a risk chair as a junk bond trader, my biggest client, by the way, I just mentioned to some of the guys, was Loomis Sales out of Boston. Boston's a great money management town, okay? My best Christmas would be coming down and talking to the team at Loomis Sales. Because the Canadian accounts would put in orders for like 5 million, 10 million. Loomis Sales, yeah, we'll do 400 million. Like, there's big ass money in Boston. I love this town. But anyway, here I am, sitting in that chair, trading a book of high yield bonds, and along comes long-term capital management, okay? About 10 years later, needed a bailout from Wall Street. Long-term capital management, I suggest you guys a good book to read, son, When Genius Failed, okay? They had a Nobel Prize winning, 2 Nobel Prize winning partners at long-term capital management. They based their entire platform, which was 100 times levered, on 7 years of data. They're like, oh my God, volatility, it's at its 99% percentile based on 7 years of data. Because the VIX hadn't existed for only 7 years. So here's a firm that brings down Wall Street, again because of leverage, based on a Nobel Prize winner and a bunch of clowns, and they had to get bailed out by the Fed. So that's the second financial crisis. The big one the great financial crisis of 2008, 2009, I was working at a hedge fund. And I'm proud to say we were making money hand over fist. And I was still crying myself to sleep because I thought the global financial system was absolutely ending, okay? We were short subprime. We had all those trades on that you, perhaps if you've seen the movie, the Big Short. And then we actually reversed the trades and we bought some stuff in the hole. It was a restructured product designed by Wall Street, sold to poor Canadian accounts like university endowments and everything to the tune of $32 billion. Now guess who the largest holder of this restructured financial product in Canada was? Quebec's largest pension plan. Case de dépôt placements, Quebec, okay, my hometown, bunch of fucking morons, okay? They also just funded Celsius. Now people don't know who Celsius is, do some research, but Case de dépôt placements, Quebec just had to write down $200 million. This is not near for them. But their statement was, we will never invest in Bitcoin, but we're going to fund this Alex Mashinsky character that's got a list of violations of financial laws, etc. And the idiot Frenchman, and I'm married to a French lady, so I can say it, okay? The fucking idiot Frenchman put $200 million of Quebec pension money into this scam called Celsius. So, this is my first lesson. There's Bitcoin, and then there's shitcoins. Please remember the difference, okay? Bitcoin is the only digital asset that will solve, now this is key, the fiat Ponzi. And the fiat Ponzi is what makes leverage eventually come home to roost. So every single financial crisis that I mentioned, Lehman Brothers, leverage, liquidity gets sucked out of the system, leverage comes out of the system, asset prices crash, confidence goes to zero, the Fed has to come in and rescue the system. To rescue the financial system in the great financial crisis, about $900 billion was required. The COVID crisis was 3-point-something trillion. You see how the size of the rescue packages has to get bigger and bigger because we are continually kicking it at the road. So, I'm a risk trader. I evaluate things on probabilities. I'm statistically inclined, I like math. I need you to listen to this. Bitcoin, very simply, is the best asymmetric return opportunity I have ever seen in 35 years of managing risk. Okay? The upside is so magnificent in price terms that you should be looking at the current price of Bitcoin as a rounding error. Now I know $20,000 is not something to sneeze at, and you know you don't have to buy a full Bitcoin. But what I want you to understand for you and your children is if you own 0 Bitcoin, you're actually taking a bigger risk than if you own a proper allocation. And everybody here is going to have to figure out what the proper allocation is for themselves. The only wrong answer is 0. Okay? And you can listen to guys like Peter Schiff, who's a gold bug that still hasn't done, he's conflicted. He is giving horrible advice to his followers. Own more than 0. I own less than 100%. There's people that do own 100%. I'm not going to knock them. But I don't believe you need to own 100% in Bitcoin to participate in the potential of the asymmetry to the upside. Okay? Don't laugh. My price target, and it's not a limit, it's a target on Bitcoin, is over $2 million US per Bitcoin in today's dollars. I need you guys to think about what that means. Firstly, I might have been sniffing glue in the parking lot, and you guys are like, who is this guy? But I also got to tell you, I've done the math. It's quite easy. I often say it's grade 11 mathematics. Grade 11 mathematics applies to the debt spiral, DEBT spiral, and it applies to Bitcoin, math plus code. So I'll get to you, I'll talk about the debt spiral second, and the price target for Bitcoin first. The total financial assets in the world are 900 trillion US dollars, okay? That includes 400 trillion of global debt. It includes 300 trillion of global real estate, about 100 trillion of equities, 100 trillion of commodities, which include gold, precious metals, fine art, and currency, okay? So there's your $900 trillion of total addressable market. I believe Bitcoin to be digital energy. And we can talk about that if we want, but as an engineer, it resonates with me, okay? Bitcoin is actually stored digital energy. And for that reason, I believe there will be a time when valuable oil and natural gas or natural resource energy is priced in Bitcoin. For an engineer, first law of thermodynamics, the law of conservation of energy, you can't say there's a zero probability that that'll happen. I actually think it's quite a high probability and will likely be driven, unfortunately, by a country like Russia. Russia doesn't want to be beholden to US dollar, petrodollar. When Putin wanted to use his reserves for the plans, against Ukraine, I'm not defending them, but the USA was able to freeze his bank account, essentially. Well, he can't be happy about that, and his bank account was built by selling oil and natural gas priced in US dollars. If it had been priced in Bitcoin and he had maintained a reserve of Bitcoin, no one could freeze it. Well, I'm pretty sure he's thinking along those lines right now. And if it's not him, it'll be another producer. Point is, imagine if oil and natural gas someday get priced in Bitcoin. Do you think it's crazy that Bitcoin would capture 5% of the total global financial assets? I don't think it's crazy at all. I think they'll, in fact, replace US Treasuries as the global reserve asset, okay? But stick with me on the math. 900 trillion, a 5% share of that is $45 trillion. And there's 21 million Bitcoin. What's 45 trillion divided by 21 million? It's over $2 million US for Bitcoin. And it's trading today at 20,000 today's dollars. So you do a little probability analysis. You say, you take your current trading price versus my target, 20,000 divided by 2 million. That's 1 in 100. The market is only telling me I have a 1% chance of being right. And I've traded risk long enough to know that I'm not 100% certain, but I'm way more certain than 1%. And I encourage you guys to think along those lines of a probability distribution. Bitcoin has the potential of increasing 100 times or more from its current price. 12% growth up here makes it almost 100% certain they will always have to print money to solve the debt spiral. And by printing money, you debase the money that's in existence. That is the fiat Ponzi. That combined with commercial banks that are 25 times levered to their equity absorbing base, which is to say, I need people to understand this, for every $100 of loans a bank makes, they only hold $4 of equity capital. The other $96 is depositors' money and subordinated debt. Henry Ford said this over 100 years ago. If the average American understood how the commercial banking system worked, there'd be a revolution. And he's not wrong. And it hasn't changed. And this is why it's the fiat system that's the Ponzi, not Bitcoin. So I was introduced to Bitcoin in 2016. I retired from my career trading at Wall Street in London. I was based out of Canada, but all the trades went through New York pretty well. I was absolutely despondent about the system that I had seen created. I had given up hope in terms of, I felt we were stealing from our children's future, and we are still, but I didn't know of a solution. And I was introduced to Bitcoin, and the price at that time was about $1,000. And I did the same sort of math I was doing in my head now, and I'm like, oh my God, this is so exciting. Bitcoin's definitely going over $10,000. I was actually with Kathy Woods. I'm not sure if you guys know who Kathy is, but you know, I'm a big fan of hers, and we made some co-investments together in a company in Canada that actually founded Canada's first Bitcoin ETF, something you in the United States still don't have. So Canada leads at a few things, including hockey. That's a but no, Boston is a great hockey town. So, point is, I got in at $1,000. Bitcoin is a far, far superior investment on a risk-adjusted basis today than it was when I got in 2016. And the reason is very simple. COVID hadn't happened yet, and we hadn't seen the global response to COVID, which included irresponsible money printing and deficit fiscal spending. I just can't even get over this thing. You know, we're forgiving student loans. Like, does debt not matter to anybody anymore? Do people not have a conscience that they need to pay back their contractual obligations? Yet it seems that's the case. So I encourage you to understand that Bitcoin is the only solution that I see to the global fiat Ponzi. Now, gold was a front runner until you realize how superior Bitcoin is to gold. But I'm not telling you to sell your gold, okay? So you got transferability, portability, scarcity. It is the perfect hard asset. You don't have to own 100% of it, but don't sell your gold assets to buy Bitcoin before you sell your bonds. Bonds are the problem. Now, I spent 35 years as a bond trader, okay? I have some experience there. The bond is a fiat contract that when you give them the money, and then when I say them, let's just take the US Treasury as an example. You lend money to the US Treasury for the next 10 years, you're going to get a 3% coupon. That's the yield today. But the value of your $100 that you invest today, in 10 years, your principal is going to be debased to the tune of, it might be worth 65% of face value. That's not a great investment. So take your money that you might, in a 60-40 portfolio, 60% equities and 40% bonds, let's say you can move it to 60, 30, and 10, where 10 are hard assets. Take the entire 10 out of bonds, please. Do it for your kids, okay? Bonds are the shittiest investment I've ever seen in 35 years. And Bitcoin is actually the most brilliant. But you don't do it dollar for dollar, okay? Bitcoin, you don't need to. We've talked about this. So I could go on and on. Bitcoin is actually, in my opinion, default insurance on fiat currencies. And I spent my career in the credit trenches. Credit runs the world. It should. I hope nobody got caught up, and if you did get caught up because you were so smart and you sold at the top in Bed Bath & Beyond. But look, Bed Bath & Beyond's bonds are trading at 30 cents on the dollar. And you got these mean guys out there buying the stock, thinking it's going from 27 bucks to $200. Hey, you don't rewrite the laws of finance. Unless the bonds are worth 100 cents on the dollar, this thing called Bed Bath & Beyond equity is a bagel. It's worth zero. But you get a couple of Reddit clowns out there saying it's going higher, get them in, we're going to squeeze those shorts, those evil shorts. No, the shorts aren't evil. It's the management of Bed Bath & Beyond that's fucking evil, okay? They should be out on their keisters. Did they raise any money at the point where Bed Bath & Beyond? No, the guy that sold, this guy Ryan Cohen, he flushed, he's like, sold to you. And all these other idiot memers are like, oh my God, my hero's out, but we're gonna pretend it's still worth something. Bed Bath & Beyond is worth zero unless the bonds are worth 100 cents on the dollar, and the bonds are trading at 30 cents of parity. Always look at what credit does. That applies to government credit, it applies to credit within a corporation, the priority of claims, okay? Credit runs the world. So, I have actually used credit default swaps on foreign nations to value the price of Bitcoin. And you'll say, what are you talking about? And I'm going to run through a real quick example of the USA. So there's a beautiful market which actually foretold the default of Lehman Brothers called credit default swaps. Okay? It's unmanipulated by central banks, which is very important. And it's basically a market where you buy and sell protection on an entity. And for every buyer or seller, you arrive at a price. It's like an insurance product. It's like fire insurance, okay? Except that it's not openly bid. It's, fire insurance, you tend to buy it from your local insurance company. It's not an open market. But this credit default swap is an open market that determines the likelihood of countries defaulting. So right now, Turkey has a high likelihood of defaulting. You can see this in the premiums that people are paying to insure against the default of Turkey. But believe it or not, there's people out there that are buying default protection on the USA. And you guys will say, why would the USA ever default? And I'll say, remember 1971, when Nixon went off the gold standard? That was a default. May not have been written up as a classical default on a fiat contract, but it in fact was. And so there are people out there that are paying for protection on the USA, and that rate is well advertised. You can Google CDS on the USA and you'll find that number. Anyway, to run through the math, you can take the default protection rate on the USA and all other 20 G20 nations and multiply it by the outstanding debt of those nations, funded debt plus non-funded debt. And you can come up with a valuation for Bitcoin that I've done that shows that Bitcoin today should be trading for more than $400,000 a Bitcoin. Again, it's trading for $20,000. That price of $400,000 is a dynamic measurement that'll trade, that'll change tomorrow when Chair Powell gets up there and issues some, stupid forecast about transition this and transition that, and the market will adjust. But the point is, Bitcoin is trading at $20,000. I believe it has an intrinsic value of at least $400,000, and it could go to $2 million. Can't overthink this. So there's going to be some breakage in the system, and you need that insurance. That's what Bitcoin is. So you got to call it out. I'll be happy to answer questions. One of the things I like to do, I used to have a slideshow. I show this. I'll tell you a little story about my family history. My ancestors came from Norway. So my last name, Foss, is Norwegian. It means small waterfall. But Foss also stands for free open source software. That's exactly what Bitcoin is. So I think I've been born into this role a little bit. And my ancestors from Norway, via England, landed in Portsmouth, New Hampshire in the 1600s. We're fifth generation Canadian, or North American, and they made their way north. I'm not sure why they would go north rather than south, but they did, into a small town called Sherbrooke, Quebec. And my great uncle founded Canada's first automobile. And it's actually called the Fossmobile. You can look it up on the internet. It's a pretty cool piece of machinery. But my great uncle was too smart by a half. That's a bond trading expression where you overthink things. You're too smart rather than doing a simple trade. And Henry Ford actually asked my great uncle to go in business to develop these cars. And my great uncle said, nah, they're never going to catch on. All right? Don't make the same mistake as my great uncle. Okay? Bitcoin is the future. Understand when you have a technology that's so superior to anything that exists right now. Fat white guys like me have cost the future of our children. We're the most selfish pricks, the most selfish generation, pulling forward gains that should be accruing to our kids because we can't pay our bills. We're too afraid. It's embarrassing. You got to start standing up. You got to do the work that's required. That includes the study. That includes guys like, the Boston Bitcoin Club, Greg and Jeff. I'm involved in a education platform. Please look it up, called Looking Glass Education. It's a free platform teaching people people the truth about the fiat system that you would never learn in university. Because if they did teach you this in university, you'd be like, I'm not putting my money in a commercial bank. Now that's risky, right? If you understood how banking actually worked, there'd be a revolution in the morning. Who said that? Henry Ford also said the world needs an energy currency to stop all wars. Look it up. Man is brilliant. My uncle, not so much. But here we go. At the end of the day, you gotta weigh probabilities and everything. All right? So, LookingGlass.com? Yes, LookingGlassEducation.com. And this is a group of people based all over the world. We have funded, it's being translated into 18 different languages. It's being used in the school system in El Salvador and Colombia. This is going to change the world, people. It's like the adoption of the internet. So, before I forget, really great asset manager by the name of Fidelity. Boston-based Abigail Johnson, part of the original family. She's been mining Bitcoin at Fidelity for, I think, 8 years now. They endorse Bitcoin as exposure in any diversified portfolio. They say that publicly, and they've been saying it for 3 or 4 years. Their price target on Bitcoin by the year 2030 is $1 million US for Bitcoin. And the way they come up with their number is based on adoption compared to internet and cell phone. Pretty cool way to calculate it. Fidelity is the number 5 asset manager in the world. Is it surprising that the number 1 asset manager in the world, BlackRock, recently embraced Bitcoin? It's a competitive world. The clients are asking for it. And if BlackRock, number 1, doesn't offer it, they'll lose their clients of BlackRock to Fidelity. It's the way it always happens. I saw it happen with the junk bond market in Canada. I mentioned Loomis Sales was my biggest client. They would still be one of the biggest clients of Canadian high yield debt. But there are other competing funds up in Canada now, about 20 years behind the USA. So it's just a matter of adoption, of people understanding it, and it will become an asset, a portion of everybody's diversified portfolio, in my opinion. So at that, I've talked for close to an hour. I really appreciate the attention. You know what? All I know is I'm passionate about this because I'm concerned about the current fiat system. I believe the Bitcoin community is one of the most generous communities I've ever met. I can honestly call Jeff a friend, and we've met each other personally only twice, but I know we share the same type of, I believe, motives and honorability in terms of trying to leave the world a better place than when we arrived. That's all I'm trying to do. And I believe Bitcoin gives us the greatest chance of doing that, because the fiat system truly is rigged. We're going to see it tomorrow, where the whole world is waiting on a lawyer. A lawyer. Like, not a mathematician, a lawyer, who now has redefined the word transitory, so that it used to be transitory that it was going to go back to 2%. Now, in today's Wall Street Journal, I know you saw the headline, they're worried that inflation is transitioning, so transitory, to a long-term problem. Man, it's a clown show. It is an absolute clown show, and this is what we are basically hostage to. So on that basis, I have no idea what Jay Powell is going to say tomorrow morning, but the world is waiting. And it's almost comical, because he doesn't have a fucking clue. He just does not. I bet you he's questioning, why didn't I retire? Why did I leave when I had the chance? Because there's no escaping this death spiral. So, yeah.